Buying your first home is exciting, but it can also be a financial minefield if you go through any of the pitfalls I did when I purchased my first home. That's why in this video, I'm going to be sharing with you my top tips and insider info when buying your first home. All those things you don't think about when you haven't been there and done it before. Hi, I'm Mauricio, and I help first-time home buyers purchase a home with little to no money down, even if they don't have perfect credit. On this channel, we talk about real estate, mortgages, and personal finance. There are plenty of resources out there to help guide you, but nothing compares to the advice of those of us who've been there and done it before. This video is going to be all the things I wish someone had explained to me before buying my first home, especially all the hidden costs associated with buying a house. These financial pitfalls can quickly add up and leave you in debt before you even move in. As a first-time home buyer, you often don't know what to expect when purchasing a property and are taken back by additional expenses that come along with it. There are plenty of resources out there to help guide you through the process, but many don't tell you about all the hidden costs associated with buying a home. My goal is to help you make better decisions and have the peace of mind with signing those closing papers. Let's start off with the costs you most likely are aware of. Down payment and some of the biggest misconceptions about buying a home. Many first-time home buyers believe that they need to put at least 20% down in order to secure a mortgage. While this may have been true in the past, it is not the case anymore, and it's not even what I recommend for you. There are many programs available to help first-time home buyers with little to no money down. For example, the Federal Housing Administration, also known as FHA, offers loans with down payments as low as 3.5%. And if you can combine FHA with state and local programs that provide assistance for first-time home buyers in the form of grants, forgivable loans, or low-interest loans, you can keep your money to work on your house. It is important to know, however, that while smaller down payments may seem like a more attractive option, it can also come with its downsides. For one, a smaller down payment means a higher monthly payment, which can be a burden in your finances. Additionally, a smaller down payment also means you will likely be charged mortgage insurance, one of other costs we're going to dig into shortly. When considering your down payment options, it is important to speak with a mortgage lender and explore all of your options. They can help you understand the pros and cons of a smaller down payment, as well as any programs available to help you secure a mortgage with little to no money down. Overall, the down payment is just the first of many costs associated with buying a home. Now, let's talk closing costs. How much will yours be? In addition to the down payment, there are closing costs that first-time home buyers need to be aware of. Closing costs are the fees associated with completing the real estate transaction and can range from 2 to 5% of the purchase price of the home. These fees can include things like appraisal fees, title insurance, inspection fees, and attorney. It is important to know that closing costs vary depending on the state you live in, the type of property that you're purchasing, and the size of your loan. While it can be difficult to estimate exactly how much your closing costs will be, it is important to budget for them in addition to your down payment. The loan officer can give you a ballpark on closing costs until you find the house you're going to put an offer in on. One way to reduce your closing costs is to negotiate with the seller to cover some or all of the costs. In some cases, the seller may be willing to cover a portion of the closing costs in order to make the transaction go smoother. Now, let's move on to prepaids. Pre-what? Aside from down payment and closing costs, first-time home buyers should also be aware of prepaids. Prepaids are expenses that are paid up front, such as property taxes, homeowners insurance, and mortgage interest. These expenses are typically prorated over the course of the year and paid in advance at the time of closing. The amount of a prepaid expense can vary wildly depending on the location of the home, the size of the loan, and the time of the year the home is purchased. For example, property taxes can be a significant expense, particularly in areas with high property values. When you get to closing in PA, for example, taxes are paid by the homeowner for a whole year. So let's say an owner pays school taxes in January for $6,000. If you buy the house in June, you will owe the seller back $3,000 in taxes at closing. Plus, the bank will collect enough to go into the escrow account to be able to pay the full year in January after only making 4 to 5 payments. Similarly, homeowners insurance is paid upfront for a full year, and the escrow account will collect a cushion. Then you pay your payment each month collecting for insurance. When you have a full year of its gain, it gets paid. And it can be more expensive in areas prone to natural disasters such as hurricanes or earthquakes. Hopefully you can see that prepaids can add a significant amount to your closing costs. To avoid any surprises, be sure to speak with a real estate agent or your mortgage lender to get an estimate of your prepaid expenses. But beware, this is the #1 item on estimates that no one knows in the beginning, and some lenders will leave it off to make costs seem cheaper. Another insurance buyers aren't aware of is mortgage insurance. Is this for your benefit? This type of insurance protects the lender in the event that borrowers default on their loan. It is required for borrowers who make a down payment of less than 20% of the home's purchase price to have mortgage insurance. The cost of mortgage insurance can vary based on the size of the loan, the type of loan, and the borrower's credit score. The cost is typically calculated as a percentage of the loan amount and is included in the monthly mortgage payment. While mortgage insurance may seem like an added expense, it can actually be beneficial. By having mortgage insurance, borrowers are able to purchase a home with a lower down payment than would otherwise be required. It is important for you to shop around for the best mortgage insurance rate. Different mortgage insurance can change monthly payments just as much as the rate. Let's move on to the costs that start adding up once you're under contract and getting ready to close. Moving expenses are another hidden cost that first-time home buyers may not have considered. The cost of moving can vary greatly depending on the distance moved, the amount of belongings being moved, and whether or not you hire professional movers. If you're moving a long distance, you may have to pay a moving company or rent a moving truck. These costs can add up quickly, especially if you have a lot of furniture or other large items to move. Additionally, you may need to factor in costs of gas, meals, and lodging if your moving requires an overnight stay. You may also have to pay for moving supplies such as boxes, packing tape, and bubble wrap. This cost can be significant, especially if you have a lot of fragile items to pack. To save on moving expenses, consider downsizing your belongings before you move. This can reduce the amount of items that need to be moved and lower the overall cost. You could also consider hiring a professional organizer to help you declutter and pack more efficiently. Maintenance and repairs are another important consideration for first-time home buyers. Unlike renting, owning a property means that you are responsible for maintaining and repairing it yourself. This can be challenging, especially if you are not handy or don't have any experience with home repairs. It is important to budget for maintenance and repairs when purchasing a home. You never know when something might break, and it's important to have money set aside to handle unexpected expenses. You should also plan for routine maintenance, such as cleaning gutters, replacing air filters, and having the HVAC systems serviced. Doing this will make your home components last longer. Think of it like your car. Imagine if you've never changed your oil or had your car detailed and cleaned. Regular home maintenance can help prevent larger problems from developing. Keeping the property clean and free of clutter can also help identify potential problems early on. It is a good idea to learn some basics home repair skills. Knowing how to fix a leaky faucet or repair drywall can really help a lot and save you money over time. There are lots of online resources available to help to learn these skills. Furnishing your new home. I don't know about you, but as soon as I picked my house out, I started shopping online for furniture that would fit just perfectly. Depending on the size and the layout of your new home, the cost of furnishing can add up quickly. It is important for first-time home buyers to take into account that furnishing a home is a long-term investment, and it is okay to start small. Prioritize essential furniture pieces such as the bed, sofa, and dining table, and consider buying them secondhand to save on costs. Lastly, don't forget about how expensive decorating a home could be. Small accents such as pillow, rugs, and artwork can add up quickly. And above all things, do not start purchasing any of these items while you're getting your mortgage. Only purchase after you've closed. So let's talk about some tips for navigating all these costs without breaking the bank. Here's some additional tips for navigating the process without overspending. Number 1, download a few deal apps that tell you when things go on sale or are a steal. One of my favorite apps is called Brad's Deals. Number 2, check the clearance aisle when you go to Walmart or Target. I have found some great steals at the end of the season. Number 3. Shop around for homeowners insurance. Many first-time homebuyers forget about the cost of homeowners insurance, but it's an important expense to consider. Ask the agent that you talk to give you an option with a deductible and one without the deductible. Ask them to walk you through the coverage in the plan you want to choose. I found out my plan had a tornado coverage, and I lived in an area that has never had a single tornado. Number 4. Consider a fixer-upper that mainly just needs cosmetic work. While move-in ready homes may be more expensive, fixer-uppers can be a great way to save money and build equity over time. Just be sure to budget for necessary repairs and renovations before making an offer. Last but not least, don't forget about closing costs, prepaids, and all the things we talked about in this video today. By following these tips and being mindful of hidden costs, first-time homebuyers can navigate the process without breaking the bank. With the right preparation and help from trusted professionals, buying a home can be an exciting and rewarding experience. If you would like to learn more about buying a home and how we can help you start the process without the mistakes, click on the link in the description and schedule a discovery call with someone on our team. This is 100% free and no payment is required. We'll be there to guide you, answer questions, and point you in the right direction. We hope this video gave you the insight you're looking for and that you will join us for more information on next week's video. If you know someone who could benefit from this information, please share the video with them. Hit the subscribe and bell to get further notifications. Otherwise, continue to check out all of the other home buying and mortgage broker tips and guides on our channel.